Greetings, market rebels. This is Wayne. This is this week's sector situation. Ryan's already gotten the outlooks out for the various services for the week. Thanks to him, as always. Was traveling. You may have noticed that on cocktail hour. So I got back late from the Blue Ridge Mountains, and I'm going to have to do a very abbreviated sector situation this week, but that's probably better because I tend to overdo it. We all know that. That's okay. It's only from a good place that emanates, not a bad place. Try to convey as much as I can. Sometimes it's probably just a little too much. Anyway, here's our trusty disclaimer. Oh, actually, it didn't flash over. So I apologize. No, it didn't flash over for some reason. All right, let me just see why. That should have flashed as our disclaimer, and there it goes. Okay, there's our trusty disclaimer. And then here is our intellectual property rights notice. So now that I've been able to get those done, let's see if I can switch the share to the right spot. New share. Let's share this screen, which is number 2, share. And I think I'm good now. I hope I'm good. I hope it's sharing screen too. Let me see. Share. Well, I can't tell. It hasn't confirmed it for me. Let me see. Share double. I'm double checking there. Well, it seems like it is. That's all I can come up with now. Let me just sort of click over here, shut a few things down, and hopefully we're rolling and you can see Ryan's outlook for the week. And the reason I'm bringing this up is because even though this is sector situation, we have to note, right, that in the big picture sense that a lot of the biggest names of the big are reporting, starting with Microsoft, really Alphabet, but UPS is not a small thing. Visa is not a small thing, right? These are kind of big. Texas. There's a couple things happening there on Tuesday for sure, but then Meta picks up on Meta, Boeing, Ford. Obviously there's recognizable names there on Wednesday, but really Thursday is probably the big deal, and Friday with Exxon. You've got Apple on Thursday, Amazon, you've got Intel, right? So the biggest of the big, McDonald's, MasterCard, a lot of these are definitely potentially market moving on their results, on their comments, on what they're seeing, et cetera. So it could be a really important week. It could be a real volatile week. It could be one hell of a week. We'll see. It could be a dud. Sometimes that happens. But I thought last week that in a macro sense, we'd kind of set up for the final whoosh, get that over with, get it out of our system, and then try to go from there with all these earnings coming up, with the election coming up, with the buybacks by companies of shares coming up, with maybe a locked or I could say gridlocked Washington, D.C., all those things, the seasonality, the poorly positioned, the bad sentiment, that might all help the bulls starting really this week. But they started a week early. And when we look at the sectors, we'll see that I did kind of boost these up a little bit, but energy's been really good. We were looking at the triangle there and thinking, okay, got to give energy maybe the benefit of the doubt that it's gone this way. Luckily, a lot of UOA came in. It was bullish. Most of the stuff we put in was bullish for new ideas. And fortunately, that performed. And the UOA kind of helped confirm what we thought was happening in the charts. This has been the standout sector all year, really, in the market. Most of the other sectors, of course, have gotten rocked, right, annihilated. But much like if you watch macro measure, there's a lot of, you can see these resistance lines that I've had up here. A lot of these sectors look a lot like the market now, where they broke out, they pulled back a little bit to what was formerly resistance, and they seem to have held and bounced strongly. Now, the caveats I have about the market is what options expiration. There's big talk that a lot of that could have been, this big move could have been related to what was happening in the options market, especially with expiration. A lot of delta, gamma influence, blah, 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 right? We've all talked about that before. We talk about that a lot in Rebel Pit. Very possibly true, right? That does kind of throw a little bit of a into the mix. But I guess at the end of the day, they were able to do this. Now, if there's follow through, I guess you have to say it was more real. I guess that'll be the tell, right? But we just don't know. But I have to say, if you're just looking at things objectively, now this is what you want to see. You want to see these big, strong green bars, and they did generally have pretty good volume. Now, again, that could have been options related, but they did have good volume as well associated with them. So as you can see, most of these sectors look a lot like, and let's just bring up one chart of the market, but they look a lot like the market right now. Let me get rid of this, maybe a little distracting. But if we look at this a little bit more magnified, check this out, right? Strong volume. This is a big bar here, strong volume. The pullbacks relative to the up days, that volume was not poor volume, but it certainly wasn't as strong. So as of right now, it looks like, right, the bulls are stepping in bigger on the days where the market is acting bullishly. And the RSI during this kind of whole consolidation, during this whole kind of diamond-esque pattern that's unfolding here, all these areas in here, whatever you want to call that, the RSI has been improving during that, right? So I'm giving them sort of the benefit of the doubt, I guess you would say, knowing what they're capable of. If they get through this area here, then I think you have to look at the gold 50 and the white 100, get through there. You're looking at the 150 gap closure from 912, and then, or I should say 913, but from the day prior it was 912. And then you've got the 200 way up here as areas that I would expect things to move back up to if the bulls do seize control. And as BMC, Brian McCormick, noted on Cocktail Hour, right, this is the expanding wedge or channel that we've been watching, he's been watching as well. And you would think that it would try to work its way there before it terminates, right? That would be the general idea, between the 200 and there, somewhere in that vicinity, wherever that is. If it does work its way to that, maybe in a week or time or 2 weeks, we don't know. But then you'd have to see how that reacts from there. But remember that so many people ill positioned, this did not work its way down to the lower part of this expanding wedge, right? This clear new low for the year. They reversed it hard from there, and they're trying to work with it. So I'm giving them the benefit of the doubt for now in the market. And I think that spills over to these sectors. And what I wanted to note is just a few different things, because I got to keep this short so we can get this thing out tonight because of how late I was able to get home from the Blue Ridge Mountains. But these all look similar. I think a lot of you can see that right away, right? This is either near breaking out, highs are just a little ways away, or it did sort of break out and has to just take out a flat line resistance. It's a little bit above, but certainly it took out this angular resistance or resistance lines that I've had drawn. So this looks poised after finding support where you'd expect it to after a nice brief pullback. It's almost textbook. It does look poised to try to go. They all really do. My big things, as I mentioned in macro measure, are, can we trust Friday's action, or is there some obvious options hedging that went on that really overdid it because someone was on the wrong side or someone scrambled? But maybe related to that is another caveat is, are so many people poorly positioned, right? Like that could really help this market, not only now, but for as long as that ill positioning lasts. But then the flip side of that is, so many people seem to now be suddenly uber bullish. And I mean, the charts do look good. There's no denying that, in my opinion. Right now, things have really changed nicely, where you would think there's at least a strong attempt made to move these up. And I think what could be the sectors to keep an eye on, let me see if I can get this to, I'm trying to get a little bit of information for us. Just bear with me. I've got the computers flipped all around, but all the sectors in the S&P, as we know, they're way down on the year, with energy being one of the main exceptions. But some things that have really gotten clobbered are real estate. So let me just bring that up. Real estate naturally has gotten really clobbered. And you might say, well, it makes no sense for real estate to go up. Look at the situation. And I would agree with you. I mean, this thing's gotten smoked, right? That's really smoked. 33 from 52-ish right there. So that's what, almost 40%, not quite, but you get the idea. That really is a beatdown, granted. And I don't really logically think I would be ready to start going long this and thinking I'm a long-term buyer. This is a great spot for me to add. It's not going down anymore from here. But we all know that some of the worst sectors tend to bounce strongly, which is why I'm even going into this. Another thing would be the XLK. Technology's gotten battered, right? Technology, if you go from 177-ish at that high all the way down here to 113, I think, yeah, 113 right there, right? So we're at what, 64 for relative to this. So that works out to just about 40%. So that's another one you would expect, right? These have been crushed. So you would expect these to bounce back. Communications is another one. I'll note that if you want to look into these sectors, look at some of these components, check those charts out. Those charts that look primed to go, if this little recovery rally really takes hold, that's the stock side. The ones that technically look poised to go in these sectors, those are ones I would look to try to keep an eye on for a strong bounce back, along with some of the just obvious big names that have been beaten down, the Microsofts, all that. Someone's going to say no matter what that Microsoft represents tremendous value here, blah, blah, blah. You've heard it before. But these are some of the really, really beaten down sectors. Now, all of them are down, but these are the ones that are really bad. Another one would be your discretionaries, right? Find the ones in there that look poised to go. So I'll tell you right now, right, because I'm in UOA all day, if Chris and Mikey and the UOA team, if they find the right names, I mean, I'm all ready to add them. I'm not gung-ho guaranteeing, lock, stock, and barrel, lead pipe cinch. I'm just saying that as it looks right now, I'm ready to embrace what the gang appears ready to try to do. How much success they'll have, I don't know. What news comes down the pike, I don't know. But this stuff does look better. You have to give them their due. As of right now, this RSI is sweeping up on all of them. They all found either made a new low or found support. A lot of them are really beaten down. You know that these clowns that manage other people's money that think they're gods are not willing to just roll over. They're going to look at this as their time, and they always try to string together a story, right? So that's why I had this up. And the story would be, well, there's, really the earnings weren't as bad as we thought. Companies weren't sounding as bearish as we expected them to. There's some silver linings in what a lot of them had to say. If they see inflation already kind of peaking out, these are some of the things you may hear. And then, they'll run the old Washington, if the forecasters are right and Washington becomes gridlocked, then they'll say, well, you know what, it might be frustrating for political junkies, but it's great for stocks. Historically, when Washington's gridlocked, there'll be a lot of people rolling their eyes at that whole thing. But the reality is a lot of people don't want to buy into it. It actually helps these operators. And John Najarian, Dr. J, was talking about that from the family offices that he talked to out on the West Coast. He was out there this week, and they're not ready to buy into this rally. I don't blame them. I mentioned it macro measure, but I'm just noting that a lot of people that probably are looking at the situation, probably like us, are saying, no, this is still the early innings. But that's what helps these scoundrels pull off these news items they can string together and hide behind. That's what I've always noticed. It's frustrating because that it's a bunch of BS really in the long run, but in the short run, which is where we're trading in most of these services, it doesn't matter, right? We're here to make money. We're here to profit from the moves. And so you don't want to get locked in my opinion, too strongly in one direction. Now, if these lows get taken out in the recent lows, the higher lows that show up in a lot of these sectors and in the major index into ETFs, if these lows get taken out on a reversal, probably with news, then I would be ready to flip around again, because I'm really still more in the long-term bear camp by far. But as of right now, I've got to call it the way that I see it, and it looks like they want to try to move these things up. Let's take a look at a couple other sectors that we do check out. SMH is probably one of the more important ones. I mean, that to me is a counter trend. This is what I'm looking for when it comes to a counter trend rally potentially, right? There's a gap back up here. There's improving technicals down here. There's bigger volume going up on these green bars when the bulls are seizing control. It's right at the 20, which is a critical SMA. And it got really overdone way outside of my downside Bollinger Bands recently, and it's working its way back in. So this is the stuff I like to see for a little springboard type trade. I mean, there's other things I like to see too. I don't mean like this is all I like to see, but you got to give them their credit, right? There's a lot of things happening there that look intriguing as a counter trend trade at the very least. I don't want to go further than that, but at least for a quick counter trend trade, there's a lot of potential if this thing continues. XHB, right? Look at this. This is showing up all over. RSI versus RSI here. Here's higher price versus lower price. So there's your positive divergence. That's got the potential, right, to go. Now, again, lows get taken out on a closing basis, totally different story. But until they do, right, then you've got to really give them the benefit of the doubt. And they only are, the Bulls, after the pullback we saw midweek, they're only in control for one day. So the cycle of them kind of grabbing the baton back from the Bears, it didn't last all week long. It's not 5 days old. It's only 1 day old, really. Maybe a little bit longer if you want to argue other ways. But look at this. Here you are, right, with gold and silver. This is, again, I mentioned it all the time, incredibly squirrely. Did see some paper, a little bit of paper in UOA, put a few, I think one, maybe two bullish ideas in, higher low, had to kind of do it. Still hoping it goes lower. But again, I have to be objective in these services to try to help people out. It can't always be about what I want my long-term forecast or my long-term hopes, dreams, ambitions, aspirations, that I acquire a lot more physical at lower prices. And this thing just took out a lot of SMAs, but these are squirrely. Like, let's be honest about it. It has to get through the 100 there, has to get through all this resistance. I'm hoping, right, there's a little pop, people make money on our ideas, and then that's it. And then it rolls over again. But as of right now, even XAU looks good. So you don't really want to say much about that in a bad way. Let's take a look at oil. Right, here's CL. What can we get on CL? Will it give us the right look if we click on this one? Still fight. Oh, there you go. So we switched over to percentages. I still have Thinkorswim fighting with me. I don't mind so much. It kind of gets old even during the regular times that I'm charting, but when I'm trying to record for everyone, it is a little more annoying than usual. But 50 is right there in gold. And you can see it's got this higher low put in, and it's trying to work its way about above the 10, the 15, the 20, and the 50 all at the same time. And so if you get a nice little push above there, there's a flat line, of course, let's call it 89 if there's a flat line. But I do think, right, it all works out. This 100 will be downtrending, probably bumps up against this area here at 93.50-ish. So you'll have kind of a couple different reasons, flat line and 100, I think, by the time it gets there, if it does go there. And that would be the next big area for me, if it can get through this, let's call it 89.50-ish, somewhere right near there would be my, but that looks primed to at least try. That's another, I mean, I think gold and, well, I shouldn't say gold, but the precious metals and energy are some of the squirreliest stuff, things to trade. They can really give you fits. You know, we all kind of know that. Let's take a look at random length lumber futures. I don't think it likes when we click on this. So let's see if we can get November's futures to get the closest one that's hopefully still active. And those have continued to improve. They are right near this area here, which that's a pretty important. I think you can see there's sort of a flat line there. Again, thanks to Thinkorswim, you can't even tell what price level. Thanks, guys, for switching over to percentage for some reason. But right, honestly, it's very close to this high or this open back here on 913. So 573. So, right, I think you stick with the downtrend until more this kind of a high is taken out on a closing basis, and you're not super overbought on RSI. And right now you're at 66. So you're not super overbought. But, you know, when you take out highs, you don't want to be in the 80s, right? It's hard to keep going at that point without a special situation in place. So I think overall, right, that's still stuck in a downtrend. But look, it does look a little bit better. So hope springs eternal. Somehow they think with wages falling against inflation, and they think that with interest rates over 7% when it comes to home loans, mortgages, somehow that's a great sign. I'm on the other side of that, but don't fight what's in place right now until you start seeing signs of it faltering. And signs of it faltering could be something as simple as this. I mean, I think this would be a very simple way to say, is it faltering? So a lot of times when you put these support lines under action, it'll dovetail with a flat line, and then that'll be your real level. And I think that really is, right? You can see that falling below really Thursday's low of 520 is probably the thing that starts letting it work back down towards the 50. So that would be my other level. But I don't want to get too deep in the weeds, especially because we are pressed for time. I think we have been looking at copper. So let's see if we can take a look. We can take a look at copper See if that's improved a little bit. And it doesn't like, though it's okay. Doing nothing, right? Sort of sideways action up a little bit. Maybe it got caught up in the frenzy. But right, I think taking out the 50, taking out this high, obviously that would be a change of pace, could mean something. I can't even give you levels because this this thing keeps changing. So we might just have to note some of the big, we might just have to note some of the big stuff that's happening and call it a day if Thinkorswim's really attacking me here. But anyway, you could see that that would be, I mean, let's just call it the 100. So watch the 100 if you care about that. I mean, copper, a lot of you know the story there. A lot of people like to call it Dr. Copper, doing a lot of nothing kind of for the last few months. Let's see, what else can we check out? Oh, IYR. Let's take a look at IYR. Here's the real estate ETF, higher low, right? And we reverse. So I think you need to look at the 20 first of all on this thing at 80.25. Start taking a little more seriously if it gets through there. Clearly, if it takes out this high, and that high is 81.85, then the inmates are probably back in charge of the asylum, and they're going to try to continue to weave their magic, and they'll be up to minus 21. Now, I can't even, I'm kidding, but this is becoming hyper annoying at this point that it just keeps switching over. But that's really what would open up room, I think, for this thing to go. So I think that's the release point, 81.85, just from charting for a long time. I can't really tell you exactly why I'm saying that. It's a long explanation, and I don't even know if I have it all with me at this moment mentally to even go into all that. But anyway, this one here, HYG, right? This is your iShares high yield ETF. Suddenly, this is a world beater as per Friday. Again, is it the OPEX situation? Did everything get influenced by that? Everything get influenced by Bank of Japan selling the hell out of the dollar, supposedly? I don't know. I mean, I just don't know. But the reality is we're charting here, and the charts are saying higher low, big reversal day, could take out resistance rather easily here. Again, might not make sense, but that's what relief rallies are often about, is not making a lot of sense, but frustrating the hell out of people that want it to make sense. And then they carry on longer than you think they should, and so on and so forth. But it's really close, right? It's really close to breaking out. Clearly, you'd have to break out above the high to really be taken seriously, and then see what happens once it encounters the 50, the 100, other flat lines, like obviously right there at 73.50. Not a big mover, but bottom line is higher low. And again, diamond-esque type action in there, like we see in so many things right now. Again, I'm not calling it a diamond. I'm saying it's reminiscent of a diamond. And LQD, right? This is the inverse ETF. This we have a bearish idea in here, and that I think it was working, and then you could see the reversal there. But this just made a new low. This just made a new low and then reversed hard. But you can see the downtrends in place. You're outside of your downside Bollinger Band there in green, the green dotted line. So this is not uncommon. This is really where the market was a little over a week ago, represented by the SPY here. And that we chart those so folks can trade off of these if they hear something or see something that they found interesting in the videos or in other comments, instead of the actual index symbol. But this was right way out. They reverse it and they bring it back in. It happens. This is why I keep these things up here, because I know, right, after something gets beaten down way out of Bollinger Bands, usually the gang is, when you see a turn, there's a good chance they're going to work them back in. There could be a counter trend trade there for sure at times. But just to also tells you, if you want to go with the trend, that look, if you showed up here and you're seeing improving RSI readings, and you're outside of your Bollinger Bands and all that, it's fine to take a short trade. You can do that, but realize that, right, that you're extended on versus Bollingers. Things do not appear to be getting worse. And if they don't let it keep going, right, you've got to get out quickly, because you're probably not showing up early to the party that's been in place, well, at that point for a couple of months, right? You're late to that downtrend party at that point. So that's how I like to use it. Anyway, just keep in mind some of the really beaten down sectors, some of the really beaten down tech names. They have everything looking better. There's no denying it, I don't think. Some things are better than others. What would look better than others to me, right? Technology looks better than other things because it took out those recent highs, closed on the high, held right at what was resistance level after backing off to it. XLF looks interesting in a similar way, but not quite as impressively because it didn't reach the highs, right? See what I mean there? That gives you an idea. So this clearly, right? Basic materials, that's impressive. This is impressive in industrials to me. Close very close to the highs, if not, well, let's see what the close was there. Close of 88.68, close of 88.69. So the highest close of the week got put in on Friday. So those things are poised to keep going. A lot of the cyclical stuff I look at, the bulls were able to really work some magic on that, and they might even be able to turn even bigger cycles back to the positive with a week left. So if they have a strong finish to October, it may technically be more impressive than we would expect it to be at first glance. Just want to kind of note that. So I'm treating this with respect for now. I see the sectors really looking similarly, right? Some are better than others, as we noted. Some beaten down areas to keep an eye on. Go and check out what the best components are technically within some of those things we noted. Some things like the XLK, XLRE, communications, discretionary. Check those out, find the names, get ready. And if they do pull off their typical shenanigans, right, you'll be ready to pounce on these ideas because you pre-qualified a lot of them technically, and you're just going with the seasonality and you're banking on the shenanigans to work at least a little while longer. So I hope something I share with you is helpful to you. Thanks for tuning in. Sorry for the abbreviated situation, but I had to do a lot of driving today and really ran into some rough traffic on the way back from the mountains in North Carolina. So everyone take care, stay nimble out there. We'll see you in the webinars, so on and so forth. Thank you.